Okay, so thank you for everyone for joining. And then today we're gonna talk about the innovations in deep sectors. These days are very hot in AI and semiconductors and biohealth tech. So we invited like top 3 investors from Asia, also experienced in US market, to talk about the deep tech sector, how we encourage entrepreneurs to build companies in this sector. So let's welcome from Hyoung from FuturePlay. And then can you do a quick intro of yourself first?
Sure. Thanks for the intro, James. This is Hyoung from FuturePlay. FuturePlay's been running fund from 2013, so it's been about 12 years since its inception. We've been focusing on investing in deep tech companies from the get-go. As of today, we have invested over 260 companies. We manage about $200 million. Yeah, that's been us.
Yeah, thank you for joining. I know a lot of FuturePlay. So let's go to the Harry from Linear Capital. Yes.
Hi everyone, I'm Harry from Linear Capital. Linear was created about almost 11 years ago, but this September will be 11 years. We have been starting investing in data, AI-related startups in the beginning and gradually expanded it to include robotics and also combination of AI and other areas like biology, new chemical discovery, all those kind of things. Mostly early stages. Our typical size was 3 to 6 million USD to start with, but we can go pretty long time. We have invested about like 170 companies so far. We manage about 2 billion USD totaling in the USD and the RMB funds. And the only thing I wanted to emphasize is like most of our investment professionals were engineers. I was an engineer myself before funding Facebook, and I started in machine learning 15 years ago, but never expected AI could be so popular, so buzzword nowadays.
Okay, Harry from MPC.
Yeah. Hello, everyone. My name is Harry Man, another Harry in the panel.
The more handsome version of Harry, huh?
Don't say that, don't say that. I came from a firm called MPC. We used to be recognized by the name of Matrix Partners China. We have been around in China for, I would say, almost 17 and 18 years now, much longer time, since the early stage of consumer internet, now deep tech and AI now. So we manage about 10 billion US of AUM over like many funds. We have 7 US dollars fund and 10 local currency RMB funds. We have always been a generalist, evolving around the evolvement of China. The first phase of MPC, we've done a lot in consumer internet deals. Second phase, we've done a lot in deep tech deals. And now, obviously, every investors in China, we are shifting our focus into AIs and robotics. And that's why we've been quite active right now.
Okay, so let's ask some common questions that deep tech is kind of defined in diverse sectors. So how you guys define in your own firm as a deep tech? And can you share some success cases that you invest in deep tech sectors? Beginning from Hyoung from FuturePlay.
Sure. We started as a deep tech specialized investor from the beginning. Our founder, Jung, he's somewhere around here, started his own version of AI company called Olaworks back in the day, and he sold his company to Intel. So his mindset of backing those engineer-backed founders was our investment thesis. So we were the early investor of the AI companies back in 2012, 14, and now like a lot of those companies went public. The most famous one probably is Knoll, and one that's going public in next couple months is in Eurofit. So those are like convergence between the AI and healthcare sectors. We also invest heavily in robotics. That has a lot to do with the Korean heritage of building strong manufacturing system. So and also has a strong force coming from the society-wise, I think we're losing a lot of labor-wise. Korea is becoming the most aging society in the world, so we're losing physical labor. We're losing. We're lacking intelligent labor, so we have to replace in some level. So we're heavily focusing in automation. So that's been us. Yeah.
Cool. And you share about the success case, right? Okay, we can ask more question later. Okay, Harry Wang, let's move on.
So I think nowadays people converge to use the word deep tech, but we didn't start with that. In the very beginning, we called us focusing on data AI specifically. Didn't have a generalized term for that. And later on, we came up with a word called us like focus on frontier tech.
Frontier tech.
Frontier tech. It's actually similar things. But if you look at those words like frontier or deep tech, or sometimes people use hot tech, all those words all goes to their, the meaning on the face value. The deep tech has to go deep. Frontier tech, that means no others have really sort of demonstrated the power of this new tech. It has to be new on the frontier line. Or hard tech, it has to be really hard. Not everybody can do that, right? So all those things actually goes to one thing is it's deep, hard, like not many people are doing that. It's supposed to be not good for investment. So 10 years, you are saying that like every fund in China is shifting to that area. I would say that's like halfway true. I think a lot of people are shifting to the area we started, to focus on, but it was very lonely 10 years ago. And the companies we invest in early days, very hard to raise later funding until the last, I would say, 3 to 5 years. So for good of the bad, I think the low-hanging fruits are already gone. That's why people go to the deeper, layer, try to find those investments. But back to sort of like I'm just trying to explain my understanding of that without the technical terms, because if you go there, it'll become like I think a lot of people will just leave from the audience. But one example I want to give was you mentioned like sharing some cases was one company that went IPO last year called Horizon Robotics, the AI chip company. We were their very first investor. It actually took me 2 years to convince the funder out of Baidu. It was not easy, 2 years without explicitly convincing him to go away. That actually the seed of doing startup. You need kind of like to plant in his own heart and let the soil of himself to grow it, instead of like you try to really cultivating or pushing it yourself, because everybody know it's not an easy journey. And it took zigzags, I think for almost 3 times the company may go bust, out of bankruptcy. So like it's very hard to really develop from technology to product and from product to commercialization. And then from commercialization to scale. I mean, all those things are really big, sort of, it's called across the chasm, right? And in a typical marketing theory, there may be one chasm you just have to cross. But in deep tech, I think you have to cross at least 3 chasms. So that's one example I want to give. And the company went IPO last year. Now it's like a 15 billion USD valuation starting from 11 years ago. So yeah, it's hard. I encourage people not to give fantasy on this area. But we actually encourage the smart money to come, because we need people to take on Series A, Series B, Series C. Like not everyone can immediately get to IPO quickly.
Yeah, great.
I'm happy to mock up all Harry's deals. So thanks for getting this question being the first one, because everybody actually have I would say, a different definition of deep tech. As I mentioned, our evolution from consumer to deep tech to AI, we actually classify AI separated from deep tech. The way that we see deep tech is deeper than AI. AI is like a lot of data, a lot of training, a lot of application related, like foundation model is sexy. But what we classify as deep tech is into things that are a lot more, I would say, deeper, fundamental physics, chemistry driven, right? It could be semiconductor, it could be new material, it could be new energy, it could be advanced manufacturing core components. All that kind of stuff within our platform, we are classified as deep tech. And obviously, I think a lot of people are trying to not draw the line in between deep tech and AI now, as AI is moving more and more into robotics, the humanoid, the more complicated applications of AI, people will also be classified that into deep tech as well. So it's very, very broad. So within our own firm, we actually, within deep tech and AI, we have multiple subsectors where people only specifically focus on, I would say, energy transition, where people only specifically focus on semiconductors. And then we have the AI team, obviously, we have the robotics team, et cetera, et cetera. Because the obvious reasons is, all these sectors are so deep that you need somebody that have to be deep entrenched into the ecosystem before you can get to learn, get to make decisions, know what they're talking about. It's just like me looking at healthcare deals. Things that they talk about, I don't even know how to ask questions, right? So when you go that deep into the market, we need people that are extremely, to that industry. And that's how we build our team, and that's how we see it has been evolving.
Okay, thank you everyone for that. And then let's move on to some tailored questions to Hyoung. Do you see any patterns in Koreans, like deep tech founders, build products and scale compared to maybe other countries? Do you see some patterns that Korean deep tech founders approach the problems fixing?
Right. I think we're seeing different type of entrepreneurs nowadays compared to 10 years ago, where product-driven companies were rising, like Uber, Didi Chuxing, and Tokopedia type of companies. Now we're seeing more engineer-backed, scientists. Like Harry mentioned, it need to be patient, and the entrepreneurs need to prove their ways to raise their Series A, Series B, not entering into the market, not building the product yet. So there are other ways to prove their nobility of their technologies better than others. That's still the same in Korea. I think the unique about Korean founders are I'll say technologically they're top notch. Like I've seen the founders from the States, not too many from China, but I've seen other places around the world, but they're top notch. But Korean market is not big enough. It's big enough to start the business, but it's not big enough to scale. So all the founders that we see in Korea are thinking about building global business from the get-go. They all know that Korea is not big enough to build a unicorn, decacorn, even bigger. So I think that's coming from their heritage of building companies like Samsung, Hyundai, LG, Kia, all those big companies, but all their customers are global customers. So they have to go outside. So with that mentality, I think they're more eager to build global businesses than other founders that we see around the world. I think the closest one is probably the Israeli founders, because there's no market, there's no customer. From the get-go, they have to think about entering into the U.S. market. I think the philosophically, the mentally, I think the Korean founders are similar to Israeli founders.
Okay, maybe ask to Harry Wang about similar questions. How do you see Korean founders top notch in technology? So you may have some similar view on Chinese top tech founders. So how do you see the patterns that deep tech founders approach in building companies and compete with the other countries? What do you see any some patterns, specialty in deep tech founders in these sectors?
I think one thing that is different from especially Korea or Japan, other countries, while we share actually a lot of commonality, is we do have a native big market and a unified market. And that give the Chinese funders a capability to do what we call as, maybe you Americans love to call it vision or being visionary. I love to give it a word is okay, the technical romance. Technical romance. So you can really think big about, building something with a legacy just in China, or at least a start with China. It has been historically true for the last few decades. Well, if you move a few hundred years back, it's still true, right? So I think that like the country being so big gave the talents the capability to think romantically. I think that's sort of like the thing that's different, very different from other countries. American talents do have that as well, and during they start with US and very quickly move globally. That's actually the part of, in my opinion, historically was what limited the Chinese funders. But in the last 3 years, for reasons we like or not, a lot of Chinese funders go overseas, try to really tackle, what is different from the domestic market. And it has been actually fairly successful so far. Think of DJI. Think of the most recent case of DeepSeek. Those people are so romantic, in my opinion. They were engineers, but they have spent close to $1 billion USD using the two of the co-founders' own money. They don't want to take outside the money and build something with extreme level of openness in terms of the open source level.
They're more open than OpenAI.
Yes. Well, if we can have like 30 seconds, I want to tell one thing. It's like the different levels of openness. There are 4 levels of openness, in my opinion. One is open paper. You tell others how to really do it as a guideline. There's open model, which are the weights, those parameters, right? The third one is open source. You give the code. DeepSeek gave the code for V3. They didn't give the code for R1 though, but it's still really, I think it's already very awesome. And the last openness is open data, the data they use to train the model. No one did that. So the first 3 levels of openness, DeepSeek is the only one that did it to the extremity. So we just look at the facts. You can speak of it. Well, they do that out of their love. People don't believe it. I had a full evening dinner with the co-founder. I was so fucking amazed by that. And they didn't want to have any outside money. So they wanted to put in another $1 billion to continue to develop this.
Crazy.
Crazy guys. But I think you can find this. I think in addition to, you mentioned the pattern of Chinese talents, I think Chinese smart, Korean smart. Chinese hardworking, wow. Some Koreans are even more hardworking. Trust me. They are burning themselves more than 007. 0 to 07 days a week, right? You do more than that, right? I think Koreans sometimes have 25 hours a day.
Some limitations, but yeah.
Yeah. So I think the thing I can emphasize, I know the Silicon Valley talents pretty well. The comparison, the thing I wanted to mention is, this kind of technical romance. You can time by time, not in every Chinese funder, but time by time you can find them in those what we call as deep style startups in different verticals. They could be, they maybe not that as large as large language model market, but in their own domains. Well, such as DJI, Insta360, such as CATL, such as Huawei even in their own area in 5G. I think you can find those people time by time. They really think big. Chinese call it the 星辰大海, translating to, only the star is our destination. Only the ocean could be our warfield.
Yeah,
Very romantic.
Yeah.
Sorry.
Okay, as to the hairy man. Okay, so like a frontier tech, like deep tech, takes a long time to prove itself. So how do you evaluate like a risk when investing in this kind of a long-term technology? How do you de-risk of that things go wrong in investing in those like deep tech sectors?
Very, very good question. One thing we do invest later than them. They do the hard work.
Yeah.
They
Clever.
manage the romantic relationship with the founders. I snap them out of the deal when they are,
Makes
commercial
sense, yeah.
enough, and then we come in to help them to grow. So we do relatively a stage later than they do. Oftentimes I think the first 5 years in a lot of the deep tech deals are the hardest, because you're doing things that people don't really understand. There's so many challenges that you cannot get through. It's not like an application that you build and you launch and you know exactly what will happen within like 2 weeks of time. So that takes a very, very long time. The stage that we came in normally are the ones that they have been pretty much get through challenges, at least the initial challenges for the technology advancement, oftentimes slowly evolving into that product development. And that is exactly where our sweet spot is. Most of the deals that we do sit in that spot, but that doesn't mean that they don't have risk at all. Because oftentimes the kind of risk that we are facing right now today is the founders are too technical, too much of a geek. They're extremely good at doing research, fundamental developments, but they are not really good at managing a company. They're not really good at transitioning from a technology into a product, not to mention from a product to an enterprise that you have to manage later on. So this is the kind of challenge and the help that we like to provide to the entrepreneurs that we have been residing. Enabling them to be able to meet with the best co-founders in time, bringing them to some good top-notch executive, helping them to understand what the market needs instead of what you think technology needs. So I like to use Sam Altman as an example. A lot of people think that he's just a tech geeky, but just look at what he has done. Top-notch in tech, top-notch in politics, top-notch in negotiation, top-notch in product. So that is what is needed to build an entrepreneur to be at that world stage level. And oftentimes a lot of the deep tech founders, they are not. A lot more hand-holding than what we have to do than previously than what we have been investing into, I would say, typical commercial, enterprise or consumer application product companies. So, yeah.
Okay, so I think Harry brought us some great some topics that Harry, Wang, and Hyoung, how do you decide or how do you judge the founders who is too technology centric but lack of like a management? So in that case, you invest in or you train them to be a better founder, or you reorganize the team? How you approach that really deep tech founder to be a really big company? How you approach in those issues?
So being technical is a must in the funders I eventually choose to invest, but it's just necessary but not sufficient. So we're still looking for outliers out of those people with technical, engineering, or scientific backgrounds. Only very few can really grow to be a great entrepreneur. And what are missing? I mean, obviously, we don't care about management skill.
You don't care.
I don't. I mean, one of the reasons it was I was a very early employee at Facebook. I saw Zuckerberg grow from a kid wearing sandals every day in a company wandering around and with his name card printing bitch I'm CEO, right? Grow to be a guy who can bluntly tell either truth or lies in front of the Capitol Hill. So you can see sort of the delta from such a people. If you wanted to invest somebody already sophisticated at the time he or she comes to you in the early stages, you are doing the wrong thing. In my opinion, you are investing for the future. Management don't care, but this guy has had two things that will really wanted to sort of catch my attention. In addition to be really technically good or understanding the technical part really good. So one thing is he has the willingness or capability to learn. He kind of come with already with like 20 rules he has strictly for his company or his life. You know, he must be willing to really break a lot of things of his past and try to really grow from a great engineer to be a great entrepreneur. He must come with such a mentality. And sometimes they say they are, but they are not. So you have to spend a lot of time with them one way or another. And sometimes you have to, using Korean tradition, you have to get drunk with them. So you can see the part out of them. It's the second
Very good point.
second part I want to add is like I already said, the romance or the visionary part. And the hard thing is how can you really draw the line from being technical and being romantic? So how would you really go from here to there? They have to tell sort of the milestones, the key things they wanted to get, actually sometimes without knowing exactly how they can do that. But they do need to have such a mentality of joining this line between reality and the dream. They need to have that.
Very good point. Let's go to the Hyoung.
Well, I cannot agree enough with Harry's point. It depends on what stages you're investing. The type of founders are a little bit different. So for early stage deep tech company founders are not perfect. No entrepreneurs are perfect, right? But we're looking for one single thing that the founder is extremely good at. He's probably gotta be number 1, 2, 3 in the world, right? That's easy. But it's probably the technology. So for that much of good technician or engineer are probably lacking a lot of management skills, right? That's expected. What we're looking for is technical skills and HR capability.
HR.
Yeah, talent, like recruiting capability within
Recruiting.
within his own sector, not like managing people, but recruiting talents, right? Other HR issues or other managements, other PR, those type of things can be filled with outside help. Like that's why we exist. That's why we have our value up teams and stuff like that. So as time goes by, maybe the original founder is good for Series A, Series C, but not for IPO and post IPO. But exceptions are existing, right? Elon Musk, like Mark Zuckerberg, like those are exceptions. I don't expect all founders are like that. So what we're looking for is a very specific skill sets that are the best in the world. We don't expect too much on the management side.
Yeah.
Can I add
Sure,
one line?
go
Because
ahead.
I cannot agree more to what Harry just mentioned. Because if there's one single thing that we look at founders, is like the capability to evolve and to learn. That is the utmost important of any founder in the world. Because there's one line that we always like to say is, the founders' evolvements, put the ceiling to the ceiling of the company. If you can break it through, then you become bigger.
Yep.
So constantly learning outside your own scope and being, an all-rounder become very, very important.
Very agree on this side. Okay, so we have only 5 minutes left. So, okay, let's move on to questions that the. Okay. another angle of questions was there ever a company you backed that didn't work as expected? So maybe failure of an investment, and then what did you learn from it? Maybe we can ask all three of gentlemen here, beginning from Hyoung. Yes.
Sure. I mean, you know, we've been early stage investor. I think the failure is norm. So we don't expect, you know, 10 out of 10 will go public or get acquired. So I'll say our success rate is about 50%. So I think the common mistake, you know, that we see in the founders are coming from managing people, hiring wrong person, and not willing to evolve, and also, you know, really not really understanding, you know, their capability, and a lot of risk comes with them when they raise ton of money. If you know I've seen so many cases when companies become unicorn and failing at the same time because they never managed that amount of capital before, so they don't know how to scale. So those are the failures that I see commonly with founders.
Okay, very good. Henry?
I said, you asked a question about like sort of how to identify funders, all of that. I said something, and I would say a lot of things I said was learned from all those past failures. I would say like 8 out of 10 are usually failures for our sort of early stage investment. And maybe one of the two is really doing well. Then once it's doing really well, it gets you maybe the entire fund back. So that's sort of the typical model of early stage investment. So failure is a sort of a common friend. And that's why I don't think early stage investors gamble a lot. So you may not see that in those casinos because we already do it in our daily life.
It's boring.
Yeah, it's boring, yeah. So that's sort of one thing. But another thing I want to mention is, being too technical or being too non-technical, being visionary and being not too visionary. I mean, all those kind of things are actually mistakes. So either way, if you go to the extreme, then it becomes a mistake. So a lot of things I said, we actually broke a lot of things I already said. So the capability to learn and unlearn a lot of things, and you apply those sort of guidelines, but when a specific case comes, every time it's still judgmental call. You do a lot of analysis. You try to really go deep to understanding technology, the sort of business model or future business model, all of that. All those rules I mentioned sometimes only do one thing, is to rule out the cases you don't want to get involved. But those rules, the guidelines, cannot actually get you to invest. So last step, I usually call it like a data-driven emotional decision. That emotion part, I think is actually the ultimate model we have been training from our past mistakes. And that perfect balance may exist in Hyoung's firm and very different from our firm and very different from Harry Mann's firm. And that's the part, actually, it's so hard to, it's very delicate. It is so hard to express. But I think a lot of mistakes were made in the past, eventually to get us, the linear or FuturePlay, to where we are today. And hopefully, it goes more to the future.
Okay. Thank you. And Harry?
I would like to spin it in different way, two ways to answer that question. First of all, there are two kind of mistakes within our venture ecosystem. The first one is what we have all talked about. You invest in a company that didn't do well for whatever reasons, they failed, right? And some turn around, some don't. That is one kind of mistake. The other kind of mistake, which is I think even more important, are the misses. There are people passing by in front of all of us, and you choose not to invest in them for all the right reason. And then they turn out to be, the Mark Zuckerberg, the Horizon Robotics that I talked to. A lot of these deals has actually been passing through my desk, right in front of me, having day in, day out discussions with them. What can we learn from those mistakes, right? Is that something that I read and I don't understand? Or is that some characters within this person that, I misread it and I missed that? So that became very important, from my own point of view. And I think we're running out of time, but one last thing about it's very short stories to tell. We are early stage investors into a EV company called Expo, right? So at one point in time, they were way up high. They thought they can do everything. They were crazy. And then, they overhyped themselves. CEO were way high up. They didn't take care of the details and then share price tank. There are a couple of models that didn't work really well. And then he stepped back down into the company, take care of all the shit, and then turn around the company. At one point in time, they were a $30 billion valuation company all the way down to 6. Now they rebound, being one of the top deliveries in China, 25 billion market cap. Good story to tell, but paying attention to the CEO is what brings the company to the future.
Okay, thank you so much. And time is up. Let's give it a big hands to 3 gentlemen here. Thank you so much for your insight.
Thank you to our wonderful panel for that engaging discussion. Please be seated.